welcome back to the Attachment Point News Roundtable. Got Bryan Falchuk here with his second book coming out. Wanted to do the interview, get you while I still can before you're stuck on a press junket somewhere, you know.
Yes, that's right. Right,
So
exactly.
we got 25 minutes and then you got to hop on, hop
Right.
off. That's cool, man. But yeah, thanks for coming on. This is our first time doing this. I just confirmed ahead of time, hanging out with Lamparelli. We've been doing this for a couple of years now. A lot of good conversations.
Yeah,
Um,
this is my first foray into the insurance nerds world was Tony and Nick like in
cool.
2017 or something.
They brought me in too, man. It's like a
Yeah.
mafia. Tony
Yeah,
just
yeah.
invited me to write an article, then I kept writing, and then Nick invited me on the pod. They just bring you in closer and closer, then you can't leave. You know.
Yeah.
So,
No, exactly.
so the Future of Insurance, man, Volume Two.
Yeah, it's a super original title. I named it exactly the same as the first one, but volume 2. Yeah, so new book's coming out really soon, 22nd.
So we have the. I don't want to bug you about a third book, but you have like the traditional carriers. Now you have the startups. I'm wondering, Volume Three is gonna be interesting. The
I'm
hybrid
already
future.
thinking about it.
Yeah.
Yeah, I'm actually like, in all seriousness, I have been thinking about what's volume 3 look like, and like volume 1 and 2 are kind of not mirror images of each other, but it's like the incumbents and the startups in the insurer
Hmm.
space. So then is like volume 3 and 4 like old school brokers and agents and new school, or is it like
I think.
a single thing and it doesn't have to be like two different I don't know.
Well, so to give credit to your book that you'd written before, I thought it was super
Yeah,
interesting. It gave insights as to why maybe carriers can't change as quick as they want, or what you're fighting, the inertia, because
yeah,
people realize things need to happen, but it's hard to move a freight ship, and sometimes it's
for sure.
unintelligent too to move something that sometimes inertia is its own defense mechanism for monoliths. you know but no, I really enjoyed the first book, and then I'm really excited to hop in and see what you're seeing is kind of best in class for the InsurTechs. uh,
Yeah, yeah, and it's like it's meant to be really honest.
mhm.
So, this isn't like just a summing up of all the PR pieces you'd find on every company. Like I got in firsthand with each of them, same as the last book,
Cool.
and heard very real stories from like all but one of 7 of the 8 companies. Like it was with the founders.
Mm.
One was the COO who's really early on. Um, but like very honest, like we struggled with this, or like this investor pulled out literally like hours before we were going to close, and right after I had officially left my job, so there was no turning back and no income.
Mm-hmm.
And it's like what, or like the fronting carrier backed out at the last minute, and like so then our VCs weren't going to back. Like these are major things that people are really honest about, and I think like that's where you find the learnings, right? This is not just like you go to a conference and people are doing their presentations and everything was perfect, and they're not really telling you where they struggled or how it really went. Like that's not what this book is. It's very much like, look, we did this, it was
Mm-hmm.
awesome, this other stuff was really difficult, and we almost didn't make it, or we had to let people go. Like just very real stories.
Yeah, no, it's interesting. I'm deeply scared I'm going to butcher his name. We're talking about Kyle Nakasuchi. Is
No,
that who
you
it
get it
is?
right,
Hey,
unless
there we
I'm
go.
also
We're
getting
doing
it
it
wrong,
better.
but I think that's right.
I told him for his birthday on Twitter, I was like, I'm not going to mess up your name ever again. So there's a lot of pressure now. But we were joking. I had him on for a follow up pod, which will be 2 episodes before this. We'll have this one aired probably about the 16th of June.
Cool.
Um, I was like, so last time we talked, you raised a Series B for 30 million. This time you raised a Series D. You're at 300 million. I was like, everything was perfect, right? It was a straight
Yeah,
line. You did exactly what you wanted. Dominoes fell as they should have, and he got a good chuckle because it's problem
it's not it
solving.
at all. Yeah,
Um, some of the wisdom I got from working at Fineo, a couple of the inside guys, one said, the key to being good at startups is be comfortable with ambiguity. Another guy
yeah.
said, dignity wasn't invited to the party. Sometimes you have to go out hand in hand a little bit and
Yeah.
get that help that you need.
Kyle said like the nature of startups is risk.
Mm-hmm.
And he's not just talking about insurance startups where it's like literally it is risk, but like if he said like if this was easy, everyone would be doing it. It's not. It's incredibly hard. And being successful in insurance is also incredibly hard.
Mm-hmm.
So it's like it is you definitely have to have a stomach for it. And the trick is like when you're in this industry for a long time, like I'm 20 years in insurance, it makes you really risk averse, because it's like your whole
Mm-hmm.
your whole industry exists to like capture the risk and like put it in a bubble and make sure it doesn't explode. So why would you like risk putting your life upside down and having everything fit? Like that's a really difficult thing to live with, and to have all that ambiguity. Like I don't know how this is going to turn out. I don't know whether we'll be here tomorrow.
Mm-hmm.
It's
I did.
tough.
I never thought about it right now, but I did. I grew up around an office moving company, sold office moves in downtown LA for 6 years, did household relocations. But that whole job is like, what's the furniture like? What's the elevator like? What's the dock like? X, Y, and Z. And I would usually think about everything in a vacuum and then
Hmm.
add 30% for human error. If it's a highly competitive situation, add
Yeah.
10%,
Yeah.
just because I wanted to win the deal. And if I didn't like the customer, I was uncomfortable, add 100% because that's
Right.
just what you do, when you're trying to avoid a project. And you're like, if I get this, I'm going to have plenty of dry powder to work on this.
Yeah.
But no, it's wild. I think the other part of startups is like, and this is a double negative, so it's not doesn't work, but you can't not do it. Like you see an opportunity, you're like, this thing's broken, this thing's disjointed. Tech is so much different today than it was 40 years ago.
Yeah.
Like in Ali and Fineo's case, like how could we not try to sync together the life insurance ecosystem?
Yeah.
Like
I think some people, for some people, that's just not how they're wired, and for
mhm,
others, it's like one of the companies in the book is Branch, and
mhm,
the founder there is Steve Lekes. He he starts the sentence by saying like, I've always been a great sleeper, and I'm like, okay, what does this have to do with and he's like, but I started to wake up in the middle of the night totally unable to sleep, and because he had the idea,
yeah,
and so I'm like,
wow,
so what'd you do? And I mean, this is not like, all due respect to him, this is not a normal thing, even for someone who's like passionate about their idea. He's like, so I'd get up in the middle of the night and like start working on pro formas. Okay, no, that's really extreme, but it's to the point. Like when you see what it is, and you have a sense of what you're trying to create, it gets to a point where it's like, I can't not do this. I
yeah,
have to see this through, and like it's just not how everybody's wired. But for those who are, that draw and that sense of intention is really powerful. And I will say that about every one of the companies here is
hmm,
like their founders, you can't see how they would have not done it.
right.
Once it became clear what they needed to fix, it's like, no, this is obviously like you had to see this through.
I got a lot of respect for the founders, the guys that raise money, like the guys that deal with all the fights that us in the org don't necessarily have to deal with or see. Like you have to be pretty tough. And
Yeah.
um, it's interesting, I feel like as a salesman, so my buddy Ed is selling, Newport Beach Insurance Center. First time started doing sales like 56 and he's killing it. I
Yeah.
was like, there's something really cool about like learning how to sell. You kind of got to feel like you got to put your hands on the universe a little bit, because I
Yeah.
feel like most people it's white or black. But when you sell, you can manipulate it. Like founders seem like that on steroids, so
Yeah,
crazy.
or
Yeah.
like if they're not, they need someone in their team who is,
Yeah. Good point.
which is
Yeah.
kind of, I mean, that's one of the like, I have these takeaways that come across all of the stories, and like that's actually the first one is about like making sure you really have like Jim Albert is the founder of Neptune Flood. He described
Mm,
it as like if you lined everyone up in a circle, I guess not lined us up. If you got everyone together in a circle, there'd be no gaps. And he means like there's no missing style
hmm.
or talent or capability. He's like, I didn't want to recruit like 30 clones of me because I know I can't do this on my own. So what good is it going to do like having minions who look exactly like me?
Yeah.
I need people who are different, and like sales skills is really different, and some people are just not comfortable with that. Some are, some don't know that they could be, and they end up that way, right? You need your technical skills. You need your core,
Hmm.
like hardcore insurance skills, because it's a regulated industry. You got to know how to navigate it, and like the compliance side,
Hmm.
all of it. Yeah, you need all of those skills. You really can't you can't survive without them.
All right, I feel like we what did I say? We buried the lead on accident. The book, man, I forgot we had you on about the book, and then now we're
Yeah,
we're doing a Brett Fulmer talk and just going all over.
no, it's fun though.
um, so this 22nd, right? Your book comes out.
Yeah, yeah, June twenty
Cool,
second.
perfect. Yeah, no, I'm excited. I already it snuck out early on Audible, so if you want to find
Yeah,
the
it is. There are ways to get it already, but and it's up for pre-order right now. But
as I say,
yeah,
well,
it's out there.
there we go, there we
The
go.
future
Yeah,
of insurance.
I'll be hanging out with you on a run in about 4 or 5 hours. You'll see me out there. So
Nice. Yeah, just maybe play it on faster speed. I don't want to kill anyone's. I did get in complaint for the first book that some guys are running. He's like, no, my pace is all slow. I'm like, you can't listen to an
oh,
insurance book
1.2.
while you're running. Like, Put it up 1.25, 1.5, whatever you got to do.
I listened to your last one when I was jogging out there, but I'm a little freak. I mean, I'm working on this stuff at all hours of the night. I enjoy it. Lance pointed that out one time. He's like, "You're probably on this stuff 16 hours a day." I'm like, "Well, I got skin in the game on everything I'm touching.
Yeah, fair
I'm
enough.
lucky it's like a work hobby.
Yeah.
Kind of random story. I'm 36. I broke my hand when I was 30 playing basketball, and I kind of hung it up
Wow.
a little bit. I was playing like 3 men's leagues a night, or sorry, 3 men's leagues a week. I feel like sales and insurance and entrepreneurship kind of took over that, you know.
Yeah.
So now I kind of run, play with the kettlebell and stuff to stay in shape. But I feel like my competing's turned into, having fun with all this stuff. It gives me the stress.
When you're wired a certain way, you just find it. Like you see, there's a bunch of former addicts who
Oh
are
wow,
ultra runners.
yeah.
So like, just go into the next thing.
That's my older brother's friends. My older brother, he luckily never struggled with anything too bad or anything, but he's an ultra runner. But yeah, he's mentioned there's a lot of guys who used to,
Yeah.
they put their energy somewhere.
Right.
So
Right.
that's good. Kind of going back to the sleep thing of founders, my best friend runs a 200-person machine shop that actually got scooped up by a private equity shop, and he's like
Wow.
helping run the whole thing. But he would just wake up one night, he'd sleep terribly, and I'm like, Mike, isn't that like a great thing? You have like these reasons to be stressful. You have all these things going on. Isn't that stupendous? Then it like started happening to me with like Fineo in the brokerage and Captain. I'm like, this sucks. The first time or
I
two you
get it.
wake up in the middle of the night and you're like, oh, okay, I guess there's a lot going on. But it happens
Yeah.
a few times. You're like, man, okay, gotta figure this out. It's pretty funny. Um, to give you props, I mean, obviously, you know what you're talking about to the nth degree. We have CapDIMS, which is kind of our happy accident, CRM enabled, AMS system. Thank you for helping pull us out of the weeds. You hopped on with the guys for 5 minutes, looked at what we had going on. We're like, what do you do? How do you do it? What is this for? Who
Yeah.
are you? We were buried in our own details, and you hopped in, and
But it's hard.
yeah.
It's really hard. And like, so I've lived it just from being in startups as well, but then like listening to all these stories, and even take the startup side out of it, just like even from the first book, like, you've listened to those stories. It's really hard because, like one of the case studies in that one is employers who does APIs with
Mm,
like digital and alternative distribution, and they're constantly getting bombarded with, we need your APIs to do this and we want this functionality. And like, they're all great ideas, and they're your distribution partners. Like, you want to please them because that's where all your distribution comes from. Like, that's where your business is made. So it's tricky. Is like, how do you know? Because you can't do everything. And this go around, they wanted to make sure that whatever they built was scalable, and not like, we're not going to build 30 different sets of APIs for 30 different partners, or 100, or whatever the number is. We need an API suite that speaks to everything. So like, if someone's asking you for something, how do you know if that's what you should work on versus this other thing someone else is asking for? And like, startup or incumbent, that's really hard to do. Thing for a startup is you have runway staring you in the face in a way that maybe an incumbent doesn't. Some certainly do. And they may not be on stable ground financially, but like, for a startup, even the best performing ones, still like, do the math. They're
hmm
probably at a burning stage. And so it's like, at some point that's going to run out. So you have to make the right decision, not to make anyone feel antsy or if you're in this spot, but like, focus is unbelievably critical. It's actually like, it's a life or death issue. And
No,
it's hard to see it.
you're right. And Ali gets it. He talks about it's so hard to align yourself with another startup because both people are on their own sprint, their own agendas,
Right.
trying to figure out their victories. Um, yeah, no, it's hard though. I mean, you can get caught up in your own, your own details, your own story. You can kind of get lost in the forest or in the trees, not see the forest. Forget how that one goes. Um, what do you think to kind of wind back to the carriers? I've always really liked the entrepreneur kind of perspective when they kind of home grow a project. I want to
Mhm.
say farmers had like Toggle where they're doing some direct to consumer stuff. So you have a separate stack that ideally can kind of complement or maybe take over. To me, that seems like the way to transition. I just don't know how you change a behemoth.
Yeah. I mean, the thing I'd say is like, there's a number of different ways you can skin the cat.
hmm
And I shouldn't use that saying because we just got a cat. But and I love him, so I don't want to skin him. But like, I've come to realize there really isn't a right or
Okay.
wrong answer. There's a right or wrong answer for you, because
Okay.
each context has all of its own specifics and politics and whatever. There's 8 companies in the book. I said I wasn't going to say this publicly, but there were supposed to be 9.
Okay.
The ninth one had to come out. They had to pull out, and that was a homegrown I thought it was a cool way to like, here's all these standalone startups,
Mm,
sort of clear cover, sort of birthed out of AmFam.
yeah.
Um, but like this was a startup like what you're mentioning with Toggle, or like you got Putty
Hmm.
at the Hartford, or Cerity at Employers.
Hmm.
Um, there, and I thought it was really cool because there are assets at your disposal that a startup doesn't have, and there's liabilities.
Mm,
And so, like some will start up that new entity on a lot of the existing assets, which is good because it can speed them along, but it also means all the constraints, all the complexities exist with it too, including like just the release cycle.
mm,
Like Jim Albert at Neptune, he's like, we release a new rating plan or rating model, like we can do it every 2 days basically. They might wait longer and stuff, but like they can basically change their rating within the filed guidelines. They're ENS, so they've got some
yeah.
flexibility, but like anytime they want. But you go to like, I started my career at Liberty Mutual, so it's a lot smaller when I was there, but like Liberty's almost $40 billion.
Wow.
They're not changing their rating on like this line of business in this state, or for this segment of this line of business in this state every couple days.
Yeah.
That's a like, oh, we're going to slot that against the 50 other rate changes we're making. It's not a knock on them. But if you're a startup and you're put into that, yes, you have all the resources that do all those rate changes and everything, but you also have all of the competition, all the prioritization, all the complexity of operating something that much bigger with that much more process behind it. So there's there's upsides and downsides to standalone or born within. It all depends how you do it. And for that ninth case, like I liked the way that they were navigating that complexity. And you see a real variety in some of the existing carriers who have done
Mm,
these sort of like entrepreneur kind of startups. Some are doing some cool things, and some are just like, oh yeah, they have that brand. It's like they haven't really done anything with it yet, or it's like still in stealth mode, but it's like 4 years on
yeah.
now. Whereas a startup would never do that. Like you'd be dead.
Right. No, I'm with you. I think sometimes too, these companies just gotta like have a little bit more fun. I mean, it's a small thing, but you can screw off on Twitter and get some traction, create some contacts.
Yeah.
LinkedIn, you have to be a little bit more formal, but sometimes just get in the weeds and mix it up and comment on other people's stuff. And
Yeah.
I think collaboration, I think a blue ocean mindset, not seeing people's competitors, but seeing as there's gonna be plenty of stuff for everybody to ensure, is
Yeah.
really helpful.
Yeah. Yeah.
Yeah.
I mean, they're not large in the grand scheme of insurance, but the last carrier I was at was Hiscox, where I was running
Mm,
claims in the U.S. And Hiscox is, it's big now versus a lot of the startups, but like versus State Farm or Nationwide or whatever, it's teeny. But we had companies over 100 years old. It's multinational. Like we had all of the things that you could say like, oh, these are reasons to slow
mhm.
down. But I got to tell you, like that was one of the most high paced jobs I've
Cool.
ever had. We doubled in the 3 years that I was there, and like there was a lot of it was sort of like you can't turn the aircraft carrier, but you can
Yeah.
launch helicopters and jet planes and what like you need to think about all the different ways that you can make things happen. And it's not coincidental then that Hiscox is actually mentioned in both books
Mm,
because of some of that. So like Thimble is a case study in the new book. They do like episodic and subscription small commercial policies. We were trying to do that at Hiscox and we couldn't.
mm,
Like systems didn't allow it, policies didn't allow it. By the way, regulations don't allow it, and we didn't feel like we could take on that regulatory. We probably would have referred to it as a fight, but it can't be a fight. It has to be a collaboration if you want to
yeah.
change the regs. And Thimble did. So they partner together. So
Cool.
Hiscox sells Thimble policies, whereas that should have been like, oh, these are our competitors who are doing that thing we wish we could do. So let's hate them. No, like if our customers are coming to us and we can't serve their needs ourselves, we need to be able to offer them the thing that will do it. And that mentality, I think, is a big part of how you change things. And like you're saying, like just be flexible, be
Yeah.
willing to get involved with different like partnership to me is actually how the industry is going to move. It's not like it's us against them because like customers don't want to be in the middle of a war. They just want their needs taken
Well,
care of.
they actually don't even care. They don't
No.
care about our tech. They don't care about
Oh,
whatever else. Um, I think the best agents are wired that way. They just want to make sure there's good coverage out there, want to take care of the people, get
Yeah.
what's needed. It's very much, I would say, like a farming, industry as opposed to a hunting industry. We're not commercial realtors fighting for a warehouse building,
Yeah.
and those guys are tough. Don't get me wrong, they're good, competitive sales folks, but we know there's gonna be more prospects and it's more about the long game. And
Yeah.
if in the back of our mind, if we can't cover this risk, we just want to get it taken care of by somebody, and then we can
Right.
move on to the next thing, you
Right.
know.
And you get remembered for that. So
Mhm.
if there's an opportunity that you could cover, that person remembers like he put his own needs aside and just took
Yeah.
care of my needs. That's someone I want to do business with, even subconsciously.
Hmm.
Like you took care of them around the thing that they didn't want to deal with that actually puts them in danger. So why wouldn't they think positively of you the next time they have a need, or their friend does, or that
Hmm.
other business that they're talking to?
And get rich in your niche. You'll beat yourself up if you try to be too much of a generalist. Says the guy who's licensed across the board and has sold everything. You got to know what you're good at, what you can handle quick. Try to find people who can compliment you.
It's that same
You
focus
know.
point.
Yeah.
Right. And like that's the one thing I like about the things that I'm finding as I do all these like interviews and the research for both of the books is it's not like this only applies if you're in this mold or doing this kind of work or this like I don't even think they're just insurance takeaways, to be honest. But I'm trying to focus on my area, and that's insurance. So that's why I'm not also like marketing it to, I don't know, like the meat packing industry or
Hey, you're
oil and
Taylor
gas.
Swift doing country music right now. You'll go pop later, but you'll take care of your niche today. And then,
Yeah,
yeah.
fair enough.
uh, Not to
Yeah,
take
so
it
it's
like,
yeah, you yeah, go ahead.
oh, one last, but you mentioned maybe kicking around for your next book. Agents are a weird animal, and brokers and sales and distribution. That could be a whole wild array of, talk about, you could be in different worlds in the same city.
Yeah,
I'm sure there's
we
still,
shall see.
yeah.
I should focus on the launch of this one, but it's been on my mind. And I've said this to a lot of people like if Oprah picks up the book and puts it on her Christmas list and then there's like 12 million copies sold, like there may not be a third one.
Fair
You might
enough.
just
Yeah.
like go find an island and go live somewhere else, but my guess is she's probably not going to do that. But you never know.
Who
So
knows?
there'll
Maybe she
probably be
has
a third one.
like a bad claim and gets really into insurance and then starts like Oprah's Insurance and becomes like a high net worth luxury
Yeah.
brand. I can see
Maybe
it.
she's hearing the buzz of CVC and she wants to hop in herself.
I can see
And
it. I can see an Oprah insurance brand. You get
she could be the
insurance, you get
special guest.
insurance, you get
She'd be
insurance.
the special guest at ITC this year, following up on Billy Idol last year. Like maybe it's Oprah, and that's how she gets involved with it. Who knows? Anything's possible.
Exactly, exactly. So the 22nd, the hard copy comes out. Or sorry, the paperback version or
Yeah,
hard copy
physical. Yeah,
on Amazon, and we need to get some of those for the Fineo office down here in Orange County. I got a couple
cool.
insurance books up there, and then I got you on Audible already. So we're ready to rock and roll there.
The
Um,
Kindle and the paperback drop on the 22nd, and this one's going to be exclusive to Amazon,
cool.
where I haven't done that before. And then I look back on the sales, and it's like the three people who bought my books from other channels. I'm like, it's just not worth it. So, which
Interesting.
means like if people have the Kindle Unlimited, and so like you can get it for free,
Oh wow, nice.
which you can't do if you offer your book elsewhere. So that's a bonus.
Note to self, note to authors. In our last tangent, I was joking around with Brian that my wife's in grad school and I had a lot of time to kill, so I started noodling on some book ideas a little bit during the pandemic, which yeah, I'm sure it'll be a couple of years before anything comes to fruition. But any advice to like budding authors out there? Anybody who's kind of noodling?
So this is my fourth book. And I have definitely learned a lot of like things to never do again or to, that I got wrong. I will say like you need to figure out how your brain works from a writing standpoint because and I hear this all the time. People are like, "Oh, just write one page a day," and then in a year you've got like a really long book and it's great. And I don't, I can't work that way because like every day I'll have to reorient myself to whatever I wrote last time, and I'll be like cutting off that. So do what works for you to create. That's really, really critical. Don't be precious about what you write when you write it. Just write it, and then you can edit later. But on that note, like invest in a good editor. That's absolutely the case. And then from a sales standpoint, marketing is critical. And for my first book, it did pretty well, but I was playing catch up on the marketing front and like stuff like this. Like there's so many podcasts and networks and friends and people you can talk to help spread the word. You have to think about that before the book comes out. And that's something I learned the hard way. And I was doing like 3 or 4 podcast interviews a day, just to catch up, to try to get that first book to do what it needed to do. And it worked, but it's like my hair used to be black, and then I have these interviews and it's gray now.
It is funny. I don't know when I caught the bug or started thinking about it, but I saw Matthew McConaughey's book come out, and then
Oh,
like
I
I
hear it's
saw
amazing.
it's actually really good. It's encouraging. Yeah,
Yeah.
our buddy Olivia's talking about it. But it was funny because I was like, he was on Tim Ferriss, he was on Bill Simmons, the
Rich
junket,
roll. Yeah.
and like literally like he was showing up on every podcast as the book dropped. So I'll definitely do that. And then I've been quieter with my own podcast. We've been focusing on eds for the brokerage, but I'll definitely fire up the old Broker Brett radio to get this one out there too. This will be a double feature. We'll
Yeah.
blast them, video,
Well,
audio.
you've done a good job building your name. I think people think your first name is Broker Brett.
A lot of people, yeah, they don't even know what my last name is.
Yeah.
Yeah.
So that like it's like Cher. It's just Broker Brett.
Hey, happy accident stuff, tinkering, I always tell the story. Originally, it was just a form site, /home, /auto, just trying to figure out a way to get some quotes done.
Yeah.
But yeah, man, no, thanks for sharing the
Thanks.
time today. And yeah, can't wait to check out the book.
No, it's good fun. Thanks for having me on. And yeah, hopefully people pick it up at Amazon or future-of-insurance.com, and hopefully it means something to them and helps them through.
No, we'll have the links everywhere. I know I'll be listening to it. I know I picked up, some gems and perspectives on the carriers and mutuals on the last one. So I'm looking forward to checking out the startups on this one and bringing that knowledge and mind share back to Fineo, back to Capta. And thanks for doing the hard work to put it together, man.
Thanks a lot, Brett.
I'll talk to you later, guys.